earnings guidance declines in such a short period of time, and one more chaotic than the next. They basically said we're having trouble even forecasting anymore because inventory is so high and sales are so low. We just don't know how low things are going to go. I mean, this is Macy's, pretty much, the gold standard of retailing in America, telling you this. And we haven't even talked about Walmart's equally. And Walmart 6 months ago said we expect 2016 sales to be no higher than they are in 2015. And that was 6 months ago when times were good.
No, and we also hear from Gap, Old Navy, Banana Republic. They're all reporting the same exact thing at this point. That
it's truly remarkable to me. Again, how far a meme of propaganda can go. For instance, about the recovery of the American consumer, and I'm thinking, well, of all the things that are wrong with the American economy, and there are many, probably the American consumer, i.e., the service economy, is probably the weakest. I mean, you look back not to this holiday season, but the one last year, the 2015 or 14 holiday season. That was the worst holiday spending season since 2009 at the heart of the crisis, except that was great compared to this year. And now that the holiday season is over, things, as we're talking about here, are getting much worse. All the companies companies are laying off everyone, closing stores, they have record inventory, discounting, and yet the government is trying to tell us that there's all these new service jobs. And the way that I put it is, aside from the lies of the birth-death model, there'll be seasonal adjustments, double seasonal adjustments. It's kind of like I was saying, it's like cells undergoing mitosis, except this kind of freaky mitosis. Like if you lose a 40-hour-a-week job, and instead you get two 15-hour per week jobs. So now you're down to 30 hours, but they'll call that two jobs, so it's a net gain of one. And then those two jobs that create 30 hours, they are all laid off, and now you get four people that each have 5 hours a week. So now you got only 20 hours, so half the amount of hours, but 4 times the amount of jobs. I mean, that's how the BLS will report it, that jobs quadrupled, even though the number of hours were cut in half. I mean, that's how bad the extent of the data rigging is. And just like we talk about these commercials that everyone's so worried, the commercials, they're going to smash the price of gold and silver. No, when you have a record short position, you're the one who's in trouble. That's why I wrote yesterday about they are the ones who should be scared. And today, Cartel is at the best you got, talking about Monday. You can't fool anybody when you're at a record short position and you keep increasing and the prices are not going down anymore. It's the same with the propaganda, with everything else. Everyone is seeing through it right now. And that's why, as we said before the call, Goldman Sachs this morning covered their losing short position on gold. JP Morgan's on CNBC saying it's a new bull market in gold. Dennis Gartman is on CNBC saying he's buying gold in US dollars. Everyone is starting to realize that they were wrong. All their reasons were wrong. They don't understand markets. They don't understand economies. And that's why now is the time to get in and protect yourself while you still can.
At this point, why are we seeing, we're seeing gold move up like 20, 30, $35. And then all of a sudden, a couple days later, we see it come down 10, 15, 20. And then all of a sudden we see it go back up. Why are we seeing such a fluctuation now?
Well, it's simply the cartel and their death throes. You increase the volatility at the end. They're losing dramatically. Last week was a perfect example of every day during the week. You saw especially on Monday, they're smashing and smashing and smashing. But then you look up at the end of the week, the jobs report, and the next thing you know, prices are at a new high. Then, for the second week in a row on Monday, they come on the attack, smashing down prices. They had silver down 50 cents on Monday for nothing. I mean, we were talking about the day after the jobs report and then all this other horrible news over the weekend, including Donald Trump pretty much saying, my goal as the president is going to be default on the U.S. debt, among other things. And, they smashed it down. Here you go. You look up Wednesday morning and silver has gained back everything. And so silver's pretty much right near its multi-year highs, except the commercials are at an all-time high short position. I mean, what do you think's going to happen? People, do you not realize that we were in a bull market like in 2011, that the commercials had to cover their short positions into a rising market? And that's when silver went to $50 an ounce. They are going to have to now, because the whole world knows that they can't short anymore without it being obvious to the world that it's a rigging game. And by the way, didn't Deutsche Bank just admit it 2 or 3 weeks ago that they've been, with a whole bunch of other banks that it's going to rat out, they've been manipulating, or actually they admitted they were suppressing it for 15 years. Everyone knows what's going on. This game is over. The game of data manipulation is over. The game of pretending there's a recovery and a Fed rate hike, over, right? I mean, after the jobs report Friday, the official money market odds of a Fed rate hike this year are zero. Zero. They are now talking about, I think it's February or March of 2017, as if there's going to be one then. But the point is, how many years have we spent smashing gold because the Fed's going to raise rates, as if that matters anyway? And they haven't raised rates. They tried it one time last year because they had painted themselves in the corner, and they almost destroyed the entire market. And now interest rates around the world are not only much lower than in December, $10 trillion of sovereign bonds are at negative yields. I'm reading now about how banks are about to start in Japan and Europe are about to start offering negative yields on mortgages.
Yeah.
I mean, how could this possibly not be the end game right here? So to answer your question, why gold and silver are volatile, they've always been like that because the cartel's always fighting, but it's even more pronounced and more obvious than ever because they are in what's called their death throes. It's like watching the end of Fannie Mae stock at the end, where there was constantly a new rumor and it would rocket up and then it would crash again. There's no new rumors. That we're in the most massive supply demand firestorm in the history of precious metals. We're in the biggest money printing explosion in history, which is just getting started. This is a bull market around the world in precious metals. This is the time to get into the real thing and protect yourself while you still can.
Now, for those people that are still waiting, like looking at the gold and silver market because they're not sure, is there a particular time where they should start to worry, like, okay, if I don't get in now, or if I don't start to purchase gold and silver, I'm never going to be able to do it? Is there something that people should be looking at?
Well, yeah. I mean, the fact is that we've had so many shortages in this business. And, some people go, well, it's because there's not enough blanks, or there's not enough this, or there's always an excuse. Just like we were talking before, now the government's blaming the consumer for recession. The problem is there's a severe shortage around the world because there's all these years of suppression have taken out all of the inventories, and now production is falling and demand's at a record high. And the fact is 2008 was the perfect example because while the cartel was trying to push the paper price down, the whole world ran out of metal. Literally for months, we couldn't get any metal, any gold and silver. The premium on silver was 100%. So when they were telling you on TV, oh, look, silver's down to $10, it wasn't. It didn't go down at all. It was $20 the whole time, or $17 or whatever it was. On top of that, we've had so many shortages since, particularly in silver. I mean, last summer, we had a monster shortage in silver that went on from July through September. There wasn't even a crisis then. And we couldn't get product and the premiums exploded and there were 6-week to 8-week waits. That was just last summer with no crisis. And of course, we had a crisis in 2011 when the prices went up. We had a crisis a major shortage in 2013 after that big bombing of paper metal on April 12th and 15th, after Obama had his closed door meeting with the too big to fail bank CEOs. And that very next day, Goldman Sachs put out their short recommendation, and then gold fell 10% in the next 2 days. And look what happens now when they put out their short recommendation. They have to cover it because it's a bull market now. There's nothing left for them to gain out of this trade. So yes, the fact that we've had all these shortages, particularly in silver, should tell you, especially when we are probably entering the biggest crisis ever, that if you don't do it now, you may very well call us up at Miles Franklin a few weeks from now and say, oh, okay, I want to buy 1,000 silver eagles. Sorry. The premium just jumped up by $5 an ounce, and you're going to have to wait 2 months for it. Because that has happened in 2011, and 2009, and 2013, and 2015, and it's unquestionably going to happen right now.
So what happens to the dollar as the gold continually rises when it hits 1,300, 1,400? What happens to the value of the dollar at this point?
Well, I mean, I've said all along, it really doesn't matter when you talk about the dollar's value against other currencies. That's just more propaganda. There's no real correlation between the dollar index and gold. I mean, basically, the dollar index is the dollar against the euro, and to a lesser extent, the yen. So if Europe, I wrote an article a few years ago, if a bomb destroyed Europe, yeah, I mean, the US dollar index would explode exponentially. Is that bad for gold? No. I mean, who cares? These countries are all hyperinflating their currencies. I'm not sure how fast the dollar will fall against other currencies. And frankly, I've predicted all along that the dollar will be the last man standing among the currencies. That doesn't mean it's not continuing to lose its purchasing power. I mean, look at the cost of living here in America at an all-time high, even though the Fed tells us we're in, quote, deflation. But these other currencies are falling left and right. I mean, the price of gold on average is at or around, and in many cases, well above its all-time high in most currencies around the world right now. So I think, the value of the dollar's purchasing power will continue to fall. And when the Fed gets back in the QE game, which frankly, it may well do this year, especially with an election coming up, then you're going to see the dollar's purchasing power really fall against items of real value like gold. But it doesn't matter. I don't know what it'll do against the euro. I mean, tell me what's is there going to be a Brexit, a Grexit? What about these Italian banks? Are they going to all go under and require a massive bailout? I mean, who knows? Will there be a terrorist attack? Will there be a migrancy crisis? I mean, there's all kinds of factors that make it impossible to know what exchange rates will be doing, especially because all the exchange rates are manipulated by I mean, is China going to do a massive devaluation? Is Japan going to monetize every stock in the country? I mean, who knows? But the purchasing power of the dollar and all these currencies will decline. My guess is the dollar's purchasing power will be the last to go like the rest, but they'll all go like they all have throughout history.
So do you think the default of Puerto Rico, where they defaulted, do you think this is going to have a cascading effect? Because we know Jack Lew right now is pressuring Congress to bail out Puerto Rico. Where do you think this is headed?
Yeah, and Puerto Rico is $70 billion of debt. That's about, on a per capita basis, that's up there with California and the worst of our debt-ridden states. And the problem is no one realizes that they are a U.S. territory, so all that debt will be guaranteed, and the taxpayer will have to take it on. And of course, that will cascade into all the other. Remember, we had a high-yield bond crisis earlier this year. Well, guess what? High-yield bond flows are going out again, and they will continue to fall. And the next thing you know it, everything like from the cocoa bonds to the sovereign bonds, municipal bonds, the state bonds that are bankrupt, they're all going to be going down again. Credit spreads will be widening. CDSs, the collateral default swaps, whatever you call them, they'll be widening. And yeah, I mean, is Puerto Rico going to be the defining event? I don't know, but it's certainly in the context of the right market conditions could have a major cascading effect.
Now, we also see the Baltic Dry Index. I mean, it was rising for quite a bit. And now we are seeing for the last couple of days, it's been falling rapidly. What's your take on why the Baltic Dry Index is falling rapidly at this point?
Right. Now, I've been asked about this index a while. Again, it's a very esoteric kind of index because the Baltic Dry Index measures basically the level of trading activity in ships. When I say shipping, I mean actual boats, ships. So it's not just day rates, it also incorporates the amount of supply, like the overbuilding that's undergone the industry and the seasonal aspects. So in the big picture, I mean, it's one of many things that measure global trade. All of those other ones, by the way, are at all-time lows. And the thing with the Baltic Dry Index is its high was maybe in, 2011 at like 13,000. Right. And it fell to like 300 a few months ago. And then it went up to 700. And now it's down to 600. And everyone goes, oh, look, it doubled. But people don't realize the Baltic Dry Index is as seasonal of a index as you'll see. If you look at it for the last 30 years, it's a wave. It looks waves. It looks like the electrocardiogram machine, because of the time of year. So it's the weakest in like January, February, and then it moves up in the spring and comes down again. So the point is, it's made a lower low in each of these seasons. And the fact is that after its seasonal jump in the spring, it went from 300 to 700, again, down from 13,000 4 years ago, and now it's falling again, shows you it couldn't be weaker. And of course, it's being validated by not just the measures of shipping trade, but trucking, railroads, everywhere from the United States to China, Europe, you name it. So again, you talk about grasping at propaganda straws or people just simply not understanding and or just looking for anything to say something's good is going on. If the Baltic Dry Index is being looked at as a positive, oh my God, that shows you how bad things really are.
Now, you just mentioned it a couple minutes ago about how they're blaming the consumer for this recovery not happening. They're saying the consumer is stingy, they're not spending their money. And I kind of remember this back in prior to 2008, when we had the crash, when they started to blame people that, oh, see, they shouldn't have taken out a mortgage, it's their fault. And I feel like the same thing is coming around again, where they're blaming the people for what is happening in the economy. Not what they've done, not all the bubbles, not the manipulation, but they're starting to blame the people for this recovery not working? Because
Well, you got
remember,
to blame someone if you're on Washington or Wall Street or the mainstream media, because you can't obviously, if you are on a bully pulpit, you have the ability to try to create scapegoats and publish about them. I mean, to say that it's people's faults for taking out mortgages when they were the ones who forced the mortgages down their throats. I mean, they're the ones who are being sued for it. Is insane. But again, how could you blame people for not buying when they don't have money? It's not like there's this huge savings out there. I mean, we have record low savings. Most people don't have any savings at all. They don't make any money. They don't have any savings. They can't even pay their bills. So how could you blame people for not spending money that they don't have? You can't even get credit. The only people who get credit, and they get it for free, is the banks. And they need it because they're completely illiquid. That's why they don't lend anymore, because they're not going to lend to deadbeats, and because they themselves can't lend. That's why they need the free money so they can stay solvent. And what have they been doing? And they've been putting it in the stock market because they know the PPT is behind them. The problem is even that's falling apart now. The stocks are falling apart. The bonds have to be hyper monetized. Commodities are falling apart. The only thing that's been working has been physical gold and silver. And that's because the whole world is flocking to them, and there's not a heck of a lot out there. I mean, you're talking about pretty much because of what David Stockman calls the Great Deformation, all the money printing and financial engineering over the years and the bubbles built. You have pretty much an oversupply of everything, from governments to infrastructure to mines to the copper mines, not gold mines, oil wells, you name it, ghost cities. The only thing that there's a huge undersupply of is gold and silver, and actually platinum as well, because that's the only thing that prices were suppressed on so that they couldn't invest in it. So you have a world now where the only thing that people want, there's barely any of, and the production is falling. Everything else no one needs or wants, and yet there's too much inventory of it, and production keeps going up.
Now, we've talked about the crash, the collapse, the economy, just imploding on itself. Let me ask you, does the U.S. need to crash?
Well, need is the wrong word. It must crash. I mean, it's again, you go back to the heroin addict, and now that we know that the Fed itself, retired Dallas Fed president Richard Fisher, only a week after he retired, said we injected cocaine and heroin into the markets. Okay, so if you are a drug addict, it's not like, well, I need to crash. You will crash. I mean, if you keep injecting more heroin and cocaine, you will die. And if otherwise, you have to crash. So when you have this kind of imbalance, it's like like with gold and silver, they say it's holding the beach ball underwater. I mean, you can only hold it down and push it down so far before it explodes upward. Just like you can only keep something high on cocaine and crack and heroin for so long before it comes down. So yeah, the world, generally speaking, needs to crash so it can cleanse itself of this fiat money system, which has destroyed it on debt. But it's going to happen whether it wants to or not. It must happen mathematically, and around the world, much of it has. I mean, the poster child of this is, and I've said this for the last year. A year ago, I said, I am telling you people, there will not be an Olympics in Brazil. There's no way. And that was when times were good compared to they are now. Today, and we're talking about this biggest soccer star, one of the biggest soccer stars in Brazil, comes out and says, don't come to Brazil. You may get killed. I mean, that's what he's saying. That is a symbol. That is symbolic of the bricks, of the deformation, of all the excesses, the economy, the monetary system on heroin and cocaine. It must come down. And the symbolism of not having the Olympic Games, I think, is as up there with symbolizing where the state of the world is as anything.
What is the economy going to look like afterwards, with currency, with gold, with jobs? Have you looked into the future to see, or have any idea what that picture is going to look like?
Well, again, I mean, you can only have so much crystal ball. I mean, the one thing I know, and that's the reason I do what I do, is the value of gold and silver will not just be a little higher; they'll be exponentially higher. It'll be pretty much the best way to protect your purchasing power, and probably one of the only ways to increase it going forward. I mean, all these paper assets have to collapse. Of course, the economy. I mean, for instance, all these waiters and bartenders jobs, when all the restaurants are going out of business and all the retailers are going out of business, well, they're all going to, I mean, the economy, the amount of jobs losses are going to make what happened in 2008 look like nothing. the amount of debt repudiations and defaults and sovereign defaults and secessions and all those things. Look at the Brexit vote that's coming up in a couple of months. And by the way, there will be a Grexit, and I'll bet you it's this year too. All that stuff. That you're going to see all of that stuff. But how bad we'll get will be at a worst case scenario with bartering and armed I don't know. It's possible. Some parts of the world, look at Brazil. It may well happen in a lot of the world. I just don't know if the worst case scenario will happen. I can tell you that it's going to be the most difficult times anyone that's alive now has ever experienced. And the United States is going to have the biggest decline in relative standard of living of any country in history, given that we're the biggest debtor with the least assets of anyone out there right now, and we still have the strongest currency. So it's going to be particularly painful here. But I can't see how bad it will be. It's just going to be bad. And look, even if you have gold and silver, it will protect your purchasing power, and you probably get rich. But it's going to be a very scary world out there, and that's what I'm more focused on.
So when you say scarier world, what do you mean by that?
Draconian government policies. First of all, look at the trend toward socialism, communism, fascism. That's a granted. We're already almost there in this country. We got Bernie Sanders versus Donald Trump. Just in this country, let alone what's going on in Spain. They're going to have a re-election next year. They're going to have one in France with this Marine Le Pen, and they're a very extremist party. You name it. What is UK going to do if they Brexit? Are they going to become feudal again and start fighting with everybody? They're their own independent nation. You're going to see all kinds of confiscations of IRAs. You're going to see increased taxes. You're going to see more regulations. All kinds of things that are scary, and of course, social unrest, etc. I just don't know how much. And look, I wrote an article several years ago called "Protection Continuum," which basically says only you can know how much you were worried and how much you can protect yourself. Like, for instance, I said a 1 on this scale out of 10 is move into Manhattan and put all your cash into Citibank. And a 10 is to move to a desert island, bury gold in the sand, and forage for food. So again, I just don't know. I've done as much as I can for me personally along my own protection continuum, which I think is pretty far, but it's not nearly as far as what some other people will do. And other people just won't do anything. They'll just say, hey, I'll just go with the flow. But that's been a very losing recipe throughout history, to do nothing when these giant tsunami waves are coming at you.
Andy, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work?
Yes, milesfranklin.com. Miles Franklin's been in business for 27 years, one of the largest bullion dealers. If you go to the website, you'll see my free writings and podcasts there every day. You can call us at 800-822-8080, or you can email me at ahoffman@milesfranklin.com. And by the way, be sure to come our next free Q&A sessions with myself and our president and co-founder, Andy Schekman. The next two are scheduled. One is next week, next Friday, the 20th of May in Houston, and then June 24th in Chicago. They're entirely free. Again, email me, ahoffman@milesfranklin.com if you'd like to come.
Andy, once again, thank you very much for being on the Spotlight.
You're very welcome. Thanks, Dave.